Breaking news. Switch to Outsurance Business Insurance and get a 20% discount. News Leader. Proudly brought to you by Outsurance.
Welcome back. Now, lower oil prices and hefty impairments have taken a toll on Sasol's interim earnings performance. The company has reported a 34% drop in headline earnings per share to R9.27. However, strict cost controls and lower capital spending helped the group generate positive free cash flow during the period. Company CEO Simon Baloyi joins us to discuss the numbers and the road ahead. Simon, thank you so much for your time today. As highlighted, the macro conditions still proving to be difficult, but Sasol controlling what it can. And this has resulted, of course, in a mixed picture. As mentioned, free cash flow, you've managed to generate a positive free cash flow, volumes improving, but earnings still declining. Just take us through the 6 months that was.
Thank you, Darling, and greetings to your viewers. Yeah, our first half of the year was typically characterized by difficult market conditions, with 70% decline in the Rand oil price and 5% decline on average chemical basket price. Notwithstanding the market conditions, we've seen very good performance from the team Sasol. Solid operational performance with secondary volumes 10% up. If you compare the two halves, and sales volume was importantly up by 3%. So that was good to see from the team. And we also had our cash fixed costs 2% down, and capex 45% down. So the guys really on what we can control. I think the team did very well in order to withstand or counter effect of the impact of the markets.
All right. Before we get into the operational performance, I'd like to get a sense of where you are looking, or rather your longer-term price outlook for oil. You know, with uncertainty remaining the name of the game, how are you assessing that market? I mean, in just the 2 months of 2026, we've really seen volatile moves, and as you mentioned, the Rand remaining strong.
Yeah, I wish I could predict the oil price, but I cannot. And then you have to borrow me a crystal ball. So we're planning for, and that's what we do at Sasol. I think for us, we're waiting on the break-even price for all our products, making sure that, you remember at CMD, we gave a break-even price target of $60 to $55 per barrel. So if we can achieve that break-even price, we could be able to withstand the volatilities. And what we also do to protect our balance sheet, we've got a comprehensive, financial instruments in terms of hedging to hedge both the oil price and the Rand, just to make sure that we can protect a portion of our earnings to protect our balance sheet. So we're planning for the best case and the worst case scenario through the intervention through financial instruments. So I don't know where all this is going. It will go, it will go up, and we have to control what we can control. And I think that we have the volatility to just take it. We just have to be ready for it.
All right, then let's look at what you do know and what you can control, right? We mentioned there that positive cash flow came in at just under 800 million Rand, and this was, of course, achieved through operational efficiencies, particularly those cost-cutting initiatives. And I'm wondering how much fat is left to be trimmed with current macroeconomic conditions. Of course, Sasol is using the cash to de-gear.
Yeah, thank you. The focus, for the next 6 months, our priorities are clear. We firstly have to make sure that we continue with strong operational performance in terms of the production volumes. Then we need to sell those volumes. So we will put in, renewed effort or refocused efforts on the sales teams to make sure that we can sell our volumes. And not only sell volumes for the sake of that, but to also prioritize value by placing those volumes on higher margin channels. So we do that. Our volumes, and the cost discipline will remain. We've got a strict cost discipline by making sure that we can contain inflation. That's what we do. We contain inflation. So we're questioning everything. Every invoice. Every cost that must supposed to use Sasol. All of us need to make sure that we're getting the best value for money. So that will continue. We also see further optimization in working capital. We will our working capital is cyclical between H1 and H2. So our target is 16 to 15%. So we ended up on the high end. So towards, the next 6 months at H2, hopefully we can go down to 15.5%, 16%. So that's where our focus areas is going to be on what we can control. And then we can look on the refocus efforts.
And walk me through what's playing out in the international chemicals division, Simon. A lot of strategic efforts at play on that front, sort of offset by a softer environment. Where are you at with some of those initiatives? I know there's a lot of mothballing taking place. And what do margins look like on that front?
On the international chemicals at Capital Markets Day, you remember we gave 3 focus areas there to improve that business. The first one was this asset optimization and cost consciousness. The second one was our commercial excellence levers, and the last one was the market itself. So on the 2 elements that we can control, that's going well. We're seeing our EBITDA, adjusted EBITDA, going up by 10% year on year. And the cash lease cost in that business has declined as well by 6% year on year, or 10% if you normalize it for the macros. And then the commercial excellence levers are starting to deliver as well. What we're facing there is that the market is tough, and it's tough for everyone. So that is why you've seen us revising the guidance in terms of what we think is going to happen there. And then in terms of the margins, like you asked, our adjusted EBITDA margins is around 8%. And I'll say that's mid-tier of where all the peers are. So I'm pleased with the way that our teams are doing there in a very, very incredibly tough market, especially in Europe. But our teams, are focused to make sure that we can deliver on the commitments that we make.
All right, let's leave it there, Simon. Thank you so much for your time and sharing your insights with us today. We will catch up with you again when we get the full year numbers. That was Sasol's CEO, Simon Baloyi.
This just in. Switch to Outsurance and save on your car insurance, or ask for up to 1,500 Rand. News Leader, proudly brought to you by Outsurance.